discount and various types of pre-shipment credits. All those things we will be covering. So this is very important session. Let's start with the topic. Before starting the topic, let's start with the daily quote. When obstacles arise, you change your direction to reach your goal. You do not change your decision to get there. So whenever you face any problem, don't change your final aim. Don't change what you have decided. Always you can change the ways of doing the things. Okay. Otherwise you'll go nowhere. That's life. Okay. Download Adda 24/7 app on your mobile to get the updates on various banking exams and various government exams, plus study material, plus video lectures live. You can use this and tell your friends also for the same. Use this code Y432 to avail flat 77% discount on the Adda 24/7 app. Use this code as much as possible so that you can get a discount. 77% means almost what? Almost to the range of 1/4 price, right? Less than that. So let's start with today's topic. So today's topic is packing credit, means some part of packing credit. It's not totally based on packing credit. Can a packing credit be sanctioned to sub-suppliers? Okay, firstly, what is packing credit? Understand this concept. There are two types of credits given to the suppliers for exporters basically. So one is packing credit, or that is called as pre-shipment credit. And second is post-shipment credit. Remember these two things. Okay. So what are these two things? Pre-shipment means what? Pre. Understand the meaning of this. Pre, before shipment. So that's another name for that is packing credit. Okay. So this packing credit is given for preparation or manufacturing of the material. Sure. Once, suppose if when is this packing credit given? If I receive an LC or I receive a purchase order from a regular buyer, only then the packing credit is given. Okay. And depending on the credit worthiness of the customer also, to whom you are giving the packing credit. Means, suppose if I go to the bank and I ask for the packing credit or pre-shipment credit, so bank won't immediately sanction me based on the LC and based on the purchase order which somebody has given me. No. Bank will first check my trustworthiness, my KYC, right? And my scores, CIBIL scores, right? And after that only it is sanctioned. Okay. So basic meaning of this is packing credit is given for manufacturing of goods. Okay. Means I get a purchase order or LC and I don't have money to manufacture those goods. I'm having that order. I'll be getting profit after I sell it. Okay. But before selling it, means for selling it, I have to manufacture it. And for manufacturing, I don't have money. So that's why packing credit is given to the suppliers. Now the real question over here is, can packing credit be sanctioned to sub-suppliers? Means what? What is sub-supplier? Here, it's like this. If I am the beneficiary, means of an LC, or I am the exporter over here from India. But what happens? Many a times these exporters are not the real manufacturers. They are just the agents in between. Okay. So in that case, what does that agent do? Means he gets an order from some foreign client, but he can't manufacture. He is not to be frank, he is not a manufacturer. So what does he do? He gets it done from somebody. And for getting it done from somebody, he will appoint a sub-supplier. He'll appoint a sub-supplier. Now that sub-supplier, is he the real? This sub-supplier, is he the real person who has got the order? No. He is a second party. Means first beneficiary and second beneficiary. So now the question is, can the packing credit be given to this sub-supplier? So yes, that is allowed. Packing credit can be allowed to sub-suppliers at the first level. Now remember, at the first level. First level means what? Second beneficiary. Means the one who has got the LC or the order and he has given it to somebody else. Only that guy. If this second person again transfers it to third person, no, then it's not a packing credit. Okay, then it's a normal loan. So can be allowed to sub-suppliers at the first level, suppliers to the export order holder under Rupee credit scheme. understand Rupee credit scheme, there are two types of schemes. Even packing credits and post-shipment credits are given in two ways. One is Rupee and second is foreign currency. Both the ways it is allowed. Okay. Now, who will take the foreign currency loan and who will take the Rupee loan? Here. If I have to produce the goods and send it to some US or any country, but for producing the raw material required, suppose if it is available in India itself, then I'll take the Rupee credit. And if the raw material required is not available in India, it is available in some other country, then I'll take this loan in packing credit loan in foreign currency, in dollars generally, right? So that way it is done. So packing credit can be granted on the basis of inland LC opened by a bank at the request of the export order holder. So inland LC means what? See, there are two types of LCs. One is foreign LC and second is inland. Foreign LC means the issuer of that LC is some other bank in some other country. Inland LC means what? It's the issuer of the LC is also from India and the beneficiary is also from India. So that's called as inland LCs. Okay. So packing credit can be granted on the basis of inland LCs. What does it mean? Here it means that if this first level supplier or this, let's say the export order holder, he prepares a new LC based on his original LC, favoring this second level guy. So based on that also packing credit can be sanctioned. But the condition is the one who prepares this inland LC, the applicant, should be the export order holder, right? So that is one way. Now, so this is clear now. The second part is running account. Firstly, what is running account? Okay. Running account means what? Okay. Have you seen the running accounts in your daily life, in your banking career? Yes, I say you have seen always and every day you say it. What is that? Let's say CC, cash credit. What is CC? It's a running account. Means what? If some CC is sanctioned to me of, let's say, 5 lakhs and I withdraw today, let's say 3 lakhs and again deposit tomorrow, let's say 4 lakhs. Then what does it have? What does it mean? It means that as much I withdraw it, I get the interest on that part only. And if I deposit it again, then that interest is reduced for that day, right? So that is called as running account facility, which is the other running account facility which you see regularly. So that is current account. What is current account? Current account is the running account, means I withdraw it and deposit it. It's that simple. So same thing can be done in running account. So you will ask me, okay, then why running account is there? Here, the reason for running account is, let's say, give an example. Suppose if somebody is a regular exporter, okay, generally what happens, I get an LC or order and then I produce the goods and send it to that foreign client. But let's say I am Reliance or Tata, okay, and I have a regular export of, let's say, 10 to 15 ships per day, let's say 10 ships per day. Then what do you expect? That for each ship, each transaction, I should get a LC. I should go to the bank and ask them a pre-shipment credit again, and then again get the pre-shipment credit. Again, can I close that pre-shipment credit? Should I do it like that? I mean, so much documentation, right? But so to handle this part, this RBI has given the running account facility. Those who are the regular exporters and trustworthy exporters, they are given the regular this running account facility. So what do we do in that? Here, if I'm Reliance, I'll just tell the bank that, okay, I've received a phone call on which the purchase order will be received. So I've received a phone call from my client and I have to send this, let's say 100 crore goods. Okay. So from this account, I'll withdraw this 100 crores or whatever the amount is required. So bank won't ask me, where is the purchase order? We won't let you withdraw it. No, it's not that. Bank will tell me, okay, withdraw it. But the condition is like this in that. The condition is, the first thing bank will tell me, okay, you withdraw it now, but you have to produce the purchase order within 1 month time. Okay. So it's basically my trust, the trust which the bank is having on me. Bank will trust me and then it will allow me to withdraw it. And then within 1 month, I'll just produce the purchase order or the LC, anything. Okay. So confirmed orders are required, not only blank or rough purchase orders. Okay. Confirmed order is required. But after all, sir, if you are dealing with the big clients who are the regular exporters, they don't cheat generally. Generally, I'm saying, I'm not saying always. Okay. So that is basically the running account facility. So two things to be checked over here is in running account. Firstly, good exporters. Secondly, PO to be produced within 1 month, PO or LC. Next is post-shipment advance. Now, what we studied now, pre-shipment. Now, what are we talking of? Post-shipment. What do you mean by post-shipment? Post-shipment means once the goods are produced and loaded in the ship. Understand this. Loaded in the ship means FOB basis, free on board. Okay. Once they are loaded in the ship, then what happens? Once they are loaded, then I produce all these documents of BL, invoice, which are the 6 main documents in any export. Can anyone tell me? Which are the 6 main documents? I'll give you one simple trick. 2I, 2B. Remember this thing. 2I, 2B. 2I means what? Invoice insurance. 2B means what? Bill of exchange and bill of lading. Okay. 4 over. Then CO and packing list. Okay. These two are the last one. PC we'll call it. Packing list and COO. What is COO? Certificate of origin. These are the 6 main documents required. Now, instead of BL, if I'm sending it through air, then it would be an air transport document. Through rail, then rail transport document. Okay, railway receipt we call it. So understand this thing. For simplicity, I'm saying 2I, 2B, and PC. This packing list and certificate of origin. Always remember this thing. So these 6 documents I'll produce and give it to the bank that I have shipped the goods. Now, once I give it to the bank, then bank will verify all those documents and give me the loan. Now, that loan is called as post-shipment credit because shipment is already done. Okay. Now, my question is, how much amount can be sanctioned for post-shipment credit and how much amount is sanctioned for pre-shipment credit? Here. Generally, pre-shipment credit is sanctioned for 85%. Generally, I'm saying. Some bank can sanction it for 95% also, okay, or 100% also in a specific case. But generally, it is sanctioned 85%. And post-shipment finance, RBI has strictly told that you can sanction it up to 100%. So post-shipment is generally financed up to 100%, full 100%, and pre-shipment 85%. Okay. So post-shipment finance is an advance against export documents. Okay, documents have been prepared. Okay, it involves handling of export documents, sending it to the foreign bank or buyer, and collecting the proceeds thereof. Okay. Now, what do you mean by this? Sending it to foreign bank or buyer. Now, what is this? Foreign bank or buyer? Here, it's like this. Generally, in collections. Importantly, collections only I'm talking. Here, there are 2 types of transactions. What are the 4 payment methods or 4 ways of doing transactions in foreign trade? One is advance payment. Means the buyer gives the advanced payment and then the supplier supplies the good. Okay. But for that, the buyer is at risk. If the supplier doesn't supply, then. Second is open account. Okay. Open account means what? It's similar to that of the factoring, but it's simply outside the banking purview. Send the documents, send the goods, send the documents, and bank is not acting at all as any intermediary. It may just act as a courier company in that case. Okay, no risk-taking business. Third is collections. Collections means what? I send the documents to the bank only. Okay, to the bank. And if it is a site document, what is site? What is usance? I've already covered in my earlier lectures. So, what does the bank do? If it's a site document, it will get the payment from the buyer and then hand over the documents to that buyer. Okay. If it's an acceptance document, means usance, then bank will do 2 things. Firstly, take an acceptance from that buyer that he'll pay on the due date. Number one. Number two, the bank will block his lines. Block his lines means what? Block his assets. Like what we do in the collaterals, right? By taking the. So that is number three, collections. Okay, DA and DP. And last one is LC. Okay. So sending it to the foreign bank and or buyer. Why did I explain all this? Because this buyer concept, sending it to the buyer, comes in the open account system. Okay. In collections, we send it to the bank. In LCs, we send it to the bank. And the advance payment, that's a totally different aspect because money is already received over there. Okay. So open account, it is sent to the buyer. But RBI is very strict in this. RBI says you should not send the documents directly to the buyer. You should send it to the foreign bank only. But there is also a subway given. That is, you can send it to the buyer if your client over here is a trustworthy client and a regular client, satisfactory account, regular client. Okay. Only then you can send the documents to the directly to the buyer. Okay. But that is on case-to-case basis. Always remember. So post-shipment includes all this handling the export documents, then sending it to the foreign buyer or bank and collecting the proceeds thereof. That is also important. Means if the proceeds are not received either through LC or through normal collections, then what is the use? Bank will be in a default. Okay. Side docs are purchased, usance docs are discounted, and documents under LC are negotiated. What do you mean by this? Side docs are purchased. Remember, you always hear these three words: purchase of documents, discount of documents, and negotiation of documents. Okay. Understand the simple concept. When it is purchased, when something is purchased, when it is a site. Site means what? You immediately have to give the payment. So why is it purchased then if I have to give the payment immediately? Sure. If I send the documents now, I am an Indian bank and I send the documents to the foreign bank, even though they are in site. But then also it will require roughly 20 to 25 days for reaching the documents there, and then that bank checking it and then finding it correct and then paying it. So it will take around 20 to 25 days. That's called as NTP, normal transit period. So do you mean to say that the seller over here should be devoid of funds for those 25 days? He won't get any funds then. For 25 days, his funds are locked. So in that case, what do I do? Even though it's a side payment, I purchase that document. Means I'm in the bank. I purchase that document and pay him immediately. Either 60%, 70%, whatever. Okay. So I'll pay him, and then even 100% is allowed because it's a post shipment, right? So I'll pay him. Secondly, usance means what? Usance means due date payment. Means the documents are sent today and it's a payment after 60 days. So my supplier or my exporter over here will be devoid of funds for, let's say, 60 days. How to manage that? Okay. So to manage this, what do we do? The bank discounts the document. Discounts means what? What do you mean by discount? It is called as financing. So the bank will finance the documents, discount the documents, okay, and wait for 60 days. On means give 70% of the funds or 100% also, and wait for 50 days, 50, 60, whatever the due date is. On the due date, the funds are received from the other bank, foreign bank, and the loan is closed off, right? That is usance. Now you'll say then what is negotiation? Sure. Discounting is similar to that of negotiation. But under LC, the word used is negotiation. Under LC document, the word used is negotiation. Generally, discounting word is used for collections and negotiation word is used for LCs because negotiation is defined under UCPDC. Discounting is not defined under UCPDC. Okay. That's why for LC, we use negotiations, and for this collections, we use discounting. Okay. Clear with that? Now, next part. Banks generally cover the post-shipment advance under dash policy of ECGC. Okay. What do you mean by post-shipment advance? You know. dash policy of what is ECGC? ECGC is Export Credit Guarantee Corporation. Export Credit Guarantee Corporation. Okay. So what is Export Credit Guarantee Corporation? It's a government company, insurance company. What does it do? It does a simple thing. Whatever is exported, means if I am the exporter and I send some export to some foreign country, what do? I take a policy cover from this company. Earlier there was only ECGC, means before 90s. So after 90s, in 1995 roughly or 98, the insurance sector was opened. So many private players came in. So even you can get the insurance policy from the private players also now. It's not compulsory for ECGC only. Okay. So coming to the point. But even today, the majority shareholder in export insurance is ECGC. Private players are not that much existent over there. Okay. Or prevalent over there. They are existent, but not that much prevalent. So which policy? Whole Turnover Post-Shipment Guarantee Scheme. Okay. That is called as WTPSFC. Okay. Under ECGC schemes, I have taught it in my separate lecture that what is the whole WTPC? Or there are 2-3 types. Okay. For banks. Means basically this is for banks. These are the guarantees for banks. Okay. Bank has generally 3 types of guarantees. Which one? Whole Turnover PC. Okay. Means full turnover, all the clients, means there are, let's say, 100 clients in my bank who are having, let's say, exports of specific amount. So I take the policy guarantee from the ECGC that if any one of them fails, or not even anyone, some transaction of any customer fails, then I'll get the amount paid from ECGC. Okay, that's my insurance guarantee. Okay. That is whole turnover PC. Second is what? Other than whole turnover, there is separate. That's specific client PC, packing credit. Specific client. If it's a big client, then what happens? He doesn't go into all those 100 separately in my branch or in my bank, and this one client separately. So that is called as only single PC. Okay, and this one is called as WTPC. This is for packing credit, and this scheme is known as PSFC, means whole turnover PSC, PSC or PSFC they call it, whole turnover Post-Shipment Finance scheme. Okay, so banks cover it under this whole turnover Post-Shipment Guarantee scheme. Okay, all the remaining 2 schemes also, plus there are certain schemes of ECGC for the exporters, specifically for exporters. Here ECGC gives the schemes to 2 persons. One is to the exporters. There are 3 main policies for exporters. And second, they give the schemes for the banks. Again, there are 3 main policies for the banks. Okay, that guarantee policies. So that I've covered separately in my ECGC lecture. Okay, you can follow that. So today's topic was only this much, that I wish to understand, to let you know what is post-shipment finance, what is pre-shipment, then what does it involve, what is the percentage of amount given in post-shipment, what is the percentage of amount given in pre, then site, usance, and purchasing, discounting, negotiation. Okay. Then this ECGC is just a gist of ECGC policies. Then second is this sub-suppliers. Can packing credit be sanctioned to sub-suppliers? Then what is inland LC? Okay. And what is this running account? This was the topic to be covered today. And I feel that you might have got the basic meaning of everything. Okay. So join our lectures. We have a paid sessions for that. You join the lectures, you will get more clarity on that. Okay. So I'll again say use this code Y432 to avail flat 77% discount on CAIIB exams, CAIIB sessions, which we are having. We are having paid sessions over there on the Adda 24/7 app. So join this Adda 24/7 app as fast as possible, because you get all the updates and the study materials and the video lectures for various banking exams as well as other government exams. Okay. So join fast, tell your friends, share it on your social media. Okay. Bye from my side.